Let me ask you this. What does your retirement plan look like? Do you have a retirement plan? If you do, is it diversified? Is it in a tax shelter? More importantly, are you prepared for the unthinkable? If something were to happen, are you prepared for a hardship? Well, today we're sitting down with Anna Felix, and she's going to answer those questions and more next on the Small Business Voice. Hello everybody, thank you for watching the Small Business Voice. The Small Business Voice is a platform for small business owners to have their voices heard. And what would those voices ask you to do? They would say, please buy local. So today I'm sitting down with Anna Felix. Anna Felix is with Cal Choice Financial. She's here to share her story of preparing you for the unthinkable. Anna, thank you for coming on the show.
Thank you for having me.
Now, back in 2005, everything was great. You had a home, you had a successful business, you and your husband and daughter were very happy. And then December 10th, 2005, you were leaving Oakdale to go to the mall to do some Christmas shopping. Can you tell us what happened that day?
Yeah, actually I wasn't going to do Christmas shopping, but anyway.
I was just
That's fine. So we were in a car accident. There was a young boy driving behind us that got distracted by a car show and we were going pretty fast, and he hit us at like 50 miles an hour, shoved us into the car in front of us, and next second our whole life had changed. We were shoved into that car. We had, police, ambulance, that whole good stuff. My husband had to get cut out of the car. Both him and my daughter had severe head injuries, and next thing I knew, we were all traveling in an ambulance to the hospital, and so that just created a chain of a lot of crazy events. Obviously, the difficulty with the health and all of that was a difficult thing. But more importantly, you have insurance and you think that you're going to be covered, that everything's going to be fine. Even with car insurance, because my husband had had a previous head injury, 2 years into the whole process, we found out that they were trying to say that what had occurred to him in this accident was attributable to the first accident, which really had nothing to do with each other. It was different sides of the head. But anyway, long story short, there wasn't the kind of coverage that we needed for all the difficulties that were occurring. I had a daughter that had done very, very well in school, lots of great grades, not a problem, and now she was having memory issues with just basic things, which was very frustrating. And so there was a lot of rehabilitation that was necessary, but not a lot of assistance in doing that. So I found myself figuring out where to go and those type of things.
So let's go back. So you have insurance. You think you're covered. And unfortunately, you were told by your insurance company that you're not covered. This was not covered. You go to the driver that hit you. Does he not have coverage?
No, we were all covered, and that wasn't the issue. The issue, we were fully covered. The problem was that when there's severe injuries like that, insurance company's job is to not pay as much as possible. And so because in the past they could find something that they thought they could in court make it look like had been caused by something previous, then they work on those things and they make it happen. And in my daughter's case, we probably could have fought more about it, but the problem is that our attorney told us it's probably like a year of her going to this counselor and this doctor and this psychologist and this person. And for us, we were trying to get beyond this whole thing. We were trying to move forward. We were trying to help her move forward. And so we made the decision we're not going to keep going back and forth with this whole thing. So we're just going to try to settle this and move on.
Well, the sad thing is that you think you're covered. I mean, we're forced to have insurance. We pay, a good amount of our money to insurance, and you think you're covered. But then when it comes down to it, they're not there. And there was a effect, that just, I forget the term I'm trying to use, but there was an effect, a cause and effect, to where, you get hit by this gentleman, everybody's life was upset. What happened as a result to this happening? You think you're covered and something happened.
Right, so we worked at everybody recovering, and that was a long process. It meant, losing our business. I had to go on and find something else that I could do, working like midnight to 8 in the morning so that I could be available for doctor's visits and therapy and all those type of things. So yeah, it completely changed our business situation and our financial situation for that matter. Moving forward 5 years, because of medicine that they were giving my husband for the brain injury, it was affecting his heart. We didn't realize that, and it eventually killed him. So now we have a whole nother set of issues that you don't necessarily see it is going to happen, but that's where we found ourselves 5 years later.
So this is it's a horrible to hear that, but you persevered, you got through it, and how did your daughter get through this? How does a family move on through something like this?
It's really, really hard. You take it one day at a time. We were all very close. She had her own issues that she was dealing with. We're very grateful that she's been able to move forward and is doing really well, and no one that's not aware of what happened would even know. So we're fortunate for that. Of course, we lost my husband and her father, and that was a very difficult thing. And my whole mission became to help other people figure out ways to not have all of the burdens that we had. You're all going to have to go through the grief and sorrow part, and there's certain portions of that you're not going to be able to change. But on a financial side, there's a lot that can be done to make our situation better. For example, I didn't realize that there was a thing called living benefits that was part of a life insurance policy that you can tap into while you're alive. So if we'd had a policy that had living benefits at that time, we could have tapped into that in '05 when all of this was going on, when I was trying to scramble and create some other kind of business, when it was difficult to pay the bills because we had all these medical things going on and insurance wasn't covering them yet, and you had to pay forward and then they were reimbursing later and all of those type of things. I didn't know that such a thing existed. And so that's one of the many things that I am adamant about helping people know about today, that just because you have the typical life insurance, it could be just term insurance, it may not be permanent, and in addition to that, it may not be something that has living benefits. And living benefits don't really cost that much more. It's just a matter of knowing that they exist and requiring that they be part of the coverage that you have.
So you lost everything. You lost your house. You lost your husband. You and your daughter, just lives were upset. But instead of shutting down, you changed your mindset. What you want to do is you don't want to see this happen to anybody else in the future. So you do you do life insurance also?
I do.
Okay, and so there's term, there's whole life, and there's universal life. Can you explain the differences with those?
I can. So as you alluded to, when I began my journey of trying to figure out how I was going to recover financially from all of these things that had happened, I went in search of who could help me figure these things out. And I didn't find a lot of help. I found judgment. I found, you should do this, you should do that. How come you haven't done this? And I thought, wow, if this is my situation, there's probably other people that are having a similar experience. And so since I couldn't find it, I thought, well, maybe I could become knowledgeable enough, get licensed in this arena, and be that person that people could go to, that people could get assistance from. So that's what I did. I started my journey of getting licensing and finding out what really is out there in the financial world, and what really do all of these things mean. And so getting back to your question, term insurance is a temporary insurance. That's why it's called term. It's good for 10, 15, 20, 25 years. Usually the maximum is 30 years that you can purchase. So what that means is that at some point in time, it's going to run out. Most people buy term when they're young because it's $12, $18, $20 a month. It's not a big deal. But the problem is that in 20 or 25 or 30 years, whatever the amount of term that you've purchased, when that runs out, now you are 20, 25 or 30 years older. Your health is probably going to be different. And just by virtue of your age, that same coverage sometimes is completely way too expensive.
So let's talk about term for a second. So term, it might be a good alternative. There's always something good to have.
Mm-hmm.
So if you can't afford insurance, term is probably the best one to have. And the reason why I say that is because driving to work, I've seen people, having car washes or doing barbecues trying to raise money for a loved one they lost. And probably the most common answer is, I can't afford insurance. Well, with term can start off really low, and at least you have something in case the unthinkable happens.
Absolutely.
So term is a good place to start. Now, whole, why don't you tell us the differences between whole and universal?
So whole and universal are both what we consider permanent policies. So that means that you're never going to run out of coverage. You're always going to have coverage. And both of them accrue cash value, which is a really nice thing. You're putting money in there, and you're going to be able to use that money later on. So that's an important thing. The difference between whole and universal is that whole accrues cash value at a very low rate. It's just most of the money ends up going to the cost of the insurance. So unless you've had it for a lot of years, it's very hard to accrue cash value very quickly. The same is true with universal life. It's a little bit better. What I encourage people to get is indexed universal life. Now the difference with that is it is based on the S&P 500. It is not in the S&P 500. So that means that you cannot lose money. So obviously that's always a plus. It's considered a zero floor. You can never lose money in it. Some of these other policies, there was a time when there was a variable universal life, but again, it would go up and down and participate in those great highs when the market was good, but it also meant it participated in the lows, and so people could lose money. So the very best thing that's on the market now is the indexed universal life, and that allows someone to participate in those highs. When there's those lows, their account holds steady, there's no loss. And so then when things get better, like 07 and 08 were a very good example of that. People that had our accounts, they didn't lose any money. Everybody else was losing money. People in their 401ks were losing their entire 401k. And we just held steady. Our accounts held steady. In 08 and 09, when things started to recover, then they just went up from there. So there's no this up and down type of thing. So it's a great place to grow money.
I wanted to commend you because I was just fascinated with your story, and your story kind of reminds me of this woman that lost her 13-year-old daughter due to a drunk driver, and she had no money and she had no resources, and with that, but she had a passion to avenge her daughter's death, so she started Mothers Against Drunk Driving. And her story got publicized, but yours is not. I'm hoping to publicize yours with this show. But I just want to commend you for doing that. I mean, because that's a long process to go through, and it's. I just want to say thank you for your strength and your perseverance.
Well, thank you. I appreciate that.
Yeah.
It feels good to help others avoid similar things. So.
Yeah, well, and that's what we want to do. I mean, we're small business owners, and small business owners really want to help our customers. We can't afford advertising, so a lot of ours is word of mouth. And if we know somebody's story, like you, we'll tend to do, business with you. I mean, because you have a personal effect from this. It's just you're that story that we all want to kind of avoid. But like I said, thank you for just persevering and moving forward with this.
Yeah, thank you.
So you want to talk, let's talk about goals. Like what goals do you have with certain people?
So my goals are to empower women with their finances. So I work with everyone, but I do have a niche of women.
Mm-hmm.
And that encompasses a variety of things. I do seminars, I do workshops where we can talk about a variety of subjects. So sometimes that might be, how do I create tax-free retirement? Actually, using that index universal life that I talked about, we create something called a private reserve account. And it is possible to have tax-free retirement. Everyone wants to know about that. It sounds too good to be true, but it is true, and it's awesome. And so, beyond the fact that women many times are kind of left behind in the financial world, our retirement is a little bit different than men's retirement for a couple of reasons. The first one being women raise children, so many times they take a break for that. Unfortunately, we traditionally make less than men. And then when our parents get older, we become caregivers as well. And so sometimes there's another second gap that occurs in life with working. And so it's very important that our growth in our retirement plan is as much as it can be, that it's max funded. And so more importantly than everyone, I mean, everyone should do that. But for women, it's very, very important that we get started as early as possible on the right track so that we can make up for those certain things that happen in life. So my goal is to help as many women as possible. And I meet a lot of very successful women that, again, don't really know what is the best option. They hear everyone has a 401k, so maybe that's what I should do. It's a very antiquated way of creating retirement. So I enjoy really setting things up the proper way.
So a lot of companies, not everybody, but there's a lot of companies out there that offer 401ks.
Mm-hmm.
401ks usually are pre-taxed.
Mm-hmm.
So they might have, $500,000 in their account, and they're like, oh yeah, I got $500,000. But what happens? I'll just ask you the question: what happens when you borrow against it, or what happens when it comes to that time to retire, and you have a 401k?
So yeah, a lot of things that people are not aware of. So a 401k, they allow you to put money in there tax deferred, which means, oh yay, I'm not getting taxed on this money, I'm putting it away in this account. However, at some point you have to pay taxes. We don't get away from paying taxes at all. So the problem is that when you go to retire, they say, well, you know what, we have not taxed the seed that you've put in there every month, year after year after year. But now that you have this nice lump sum of money, we're going to take all the taxes out at one time. So depending on your tax bracket at the time, you could be anywhere between 30 and 50% of your money can be gone. So that little example that you gave of having $500,000 in your 401k, now you could have $250,000.
And then you got to go back to work.
That's a big difference. The other disadvantage with them is that you can't really touch them until you're 59 and a half. If you ever did before then, there are penalties and fees. So I recently talked to someone that wanted $25,000 out of her 401k. After she paid taxes and fees and all of that, she ended up with $18,000. So that wasn't even the amount she really needed. So now she paid all this taxes and fees, and she still didn't have enough to do what she needed to accomplish. Mm-hmm. So it would be far greater if we could create an account after post-tax, after we've paid taxes on it, put it in there, and be able to have access to it when we needed it for whatever we needed it for. And that way, when we pulled it out, it would be tax-free. And that's what we're able to create with a private reserve account.
Okay, so you may have a 401k, but this is more about diversifying. So, so how many different accounts should you have? Like say if you have a 401k at work, you should have a life insurance policy, preferably at least a whole life policy. Mm-hmm. Now, should you look into more than that, or?
So, yeah, I mean, the more accounts you have, the better. What we always say is if your employer is matching your 401k, then put in what they're matching. So if they're matching 4%, go ahead and put 4% in there because that's free money. Mm-hmm. Anything over and above that, which if you're really going to have a decent retirement, you should be putting in more than that. You should be putting it in your private reserve account. And now that's the account that we're talking about. It's not whole life, it's index universal life.
Okay.
And so you should be putting that in there. So if you, let's say, as a scenario, you have an employer that's matching 4%, you're putting 4% in that 401k, And let's say your goal is you want to be putting at least 10% away for retirement. So we would take that remaining 6% and put it in your private reserve account. What that private reserve account is going to do is it's going to create that tax-free retirement for you, but it's also going to provide you with the life insurance coverage that you need, whatever that amount is, whatever we come up with that is good for your situation. And it also would give you living benefits. So now you would be able to tap into money if something unavoidable happened. So you'd have that going on. Really, if you're max funding those, that's really all you need for your retirement. But the more that you can diversify, the better. We also have something called land banking, and it's the ability to own real estate within your retirement plan. So land is something that there's a limited supply of. It's the oldest form of investing available, and we do that in the Palmdale area, Palmdale, Lancaster area. So it's an opportunity to own a piece of California. There's a limited supply. It's titled and deeded. It's a tangible investment. It's not something in some bank somewhere that you don't know where it's at, and it's going up and down. You have no control over it. So that's another way to diversify. But it's a good type of an account to have as well.
So the good thing with Lancaster or Palmdale is it's close to LA. Bad thing is the desert, high desert. Yeah. So.
Well, and there's a lot of solar initiatives going on.
Yeah.
The other really cool thing is that in 2028 the Olympics are coming to Los Angeles again.
Oh.
And so where we're land banking is about an hour and a half from where the venue will be.
Oh, okay.
So we know that area is just going to be blooming.
It always is. Yeah,
yes.
it's a good place to. Especially if it's affordable now, it's one of those things you'd rather get into and not kick yourself later.
Exactly.
So if you borrow against your 401k, you get taxes and penalties. But is there any downside to borrowing against your index or your life insurance? Is there a downside to that?
No, there isn't. Other than, like I said, there's no fees. There's actually, the crazy thing is that if you take money out of that account, your account continues to grow as if that money was still in there. It's just the way it's set up with the indexing. So it's obviously, you understand that if you're taking money out of what's supposed to be for your retirement, you're reducing that account. But if you're doing it for great things, maybe you find an investment property that is an amazing deal. With a 401k, you're not going to, you can take that money out, but you're going to pay a lot to do it. With your PRA, with your private reserve account, you take that money out, go buy that investment property. Now you've diversified another way. Your account is still going to continue to grow as if that money was still in there. Now you've just increased what your retirement could be, as opposed to paying fees that are bringing that amount down. So it's a great thing to have for whatever you might need it for.
Okay. Well, that's good to know. So you're licensed in all 50 states. Correct?
I'm not licensed in all 50 states. I'm licensed in California, but
Okay.
CalChoice has agents everywhere, so I can certainly do joint work with another agent. So yes, I can help people everywhere.
So if somebody's watching this from Montana, they can give you a call.
Exactly. We can get them.
Yeah,
yes.
and that's always good to know. And I like your connection with women, and it's everybody feels comfortable with somebody, and that's the thing we want to get. I think there's going to be some people that are more comfortable with you than somebody else, and now they're getting a chance to know you, and your story of why you do what you do. So, what makes you different from everybody else?
Well, I just think that I come from a place of a lot of experiences that most people would not want to go through. So I have the ability to help people really plan for the future as they should, not with their head in the sand, not with, well, that's going to be okay, or I think I have enough. I can really tell you if something serious happens, where would your situation be? I also, come from a place of just wanting to help other people. So as I've mentioned before, one of the ways that I give back is I don't charge people to meet with me. So people can, I'll do reviews, I'll do a free review for you, so we can look at what you currently have. If what you currently have is all great and it's doing the very best it can for you, then that's great. You've done a really good job. if there's ways that we can improve it, then I can make those recommendations.
So what is your specialty in this industry?
So I really work with helping people create their own private reserve account, and we can make that whatever it is that each person needs. So I can help people with, as we've been talking about, tax-free retirement, but it might be a college fund for a small child. It might be their concern is, I don't have enough coverage, I need long-term care, but at my age it's way too expensive to do that, so we can figure out ways to fund something to have them have that. Really, it's about, I meet with each client, I figure out where they're at, what they have, what their goals are, and then we create, I say, a financial GPS, and we figure out the best way to get there. I meet with my clients annually because sometimes there's changes, there's additions, there's things that have changed, and so we can make sure, just like if we're on a trip and that whole GPS thing really is appropriate, because we may need to make a turn here, or we may need to make an adjustment, or maybe they have more money coming in than they anticipated, and we can create another account for them. So all those things, it's not about selling you something. It's about helping you really plan for your future and figuring out the best way to get you there now.
So now if they wanted to get into the same line of work, is it just taking a test? Is it just...
Yeah, it's actually not that difficult. Our company does offer a mentorship program, so it's a matter of, yes, you do have to study and get that initial licensing done that the state requires. And then CalChoice has a wonderful mentoring plan. We help people with case design, with how to help others. There's a whole lot of schooling that goes on with that. And for those that join my team, I'm an integral part of helping them with that. But yes, we welcome those that want to help others as well, anytime.
All right. And then, so we talked about charities earlier. Is there a charity or a certain foundation that you'd like to help?
Not one in particular. When I see a need, a lot of people come to me and say we need to help this particular group or that particular group. I'm always happy to do that. Again, financial literacy is a big thing, and so whether that be starting in the schools, or whether that be professional women, or whether that be entrepreneurs, those are all areas where there's seminars and there's one-to-one conferencing that we do to help whoever it is that we find needs the help. And so I know I work a lot with realtors, lenders. That's an industry where, because they are a 1099 employee, they don't have access to a 401k, they don't know where to begin. They make good money, but they're not sure where to put it all, and so it ends up that they don't have anything. So a lot of times there's conferences and things like that are affiliated with them that I can help out with.
That's good. So Anna, people watching from home, if they wanted to get in contact with you, how would they get in contact with you?
So obviously they can call me. My cell number is...
Don't say your cell number. Do your business number. Let's do that.
Well, that is my business number.
I don't want you getting like calls like...
No.
Okay.
No, that's fine. I know how to screen them. We're good. That's my business number. So that's 209-613-9445. I also have a page on Facebook called Visionary Women in Finance. So that's a good place to contact me. I have a lot of things that I post on there, very specific to women. I have a meetup group called Be a Woman with a Plan. So people can join that. We do a lot of seminars and a lot of things there. And then if they want to just know a little bit about the company that I'm affiliated with, CalChoice Financial, they can always go to that website, calchoicefinancial.com.
Okay, and then do you have a website also?
That would be the main one.
Okay,
yes.
All right, Anna. Well, hey, thank you for coming on the show and sharing your story. I really do appreciate that.
Thank you for having me.
Yeah, my pleasure. Now, if you're a small business owner and you would like to have your voice heard, please contact me at newsmallbusinessvoice@gmail.com. That's all the time we have for today. For Anna Felix, I'm Justin Duncan. Thank you for watching The Small Business Voice. Join the crusade and buy local. We'll see you next time.